Wednesday, November 15th, 2023, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at the late Jim Sinclair's 5 golden pillars of what I would say is a raging gold bull market. And why do I say that? Well, you're going to see why, because we're going to look at the dollar index as well. And the dollar index seems to have made a top. Before I do, though, I'd just like to let you know that I have a promo code with the Dirty Man Safe. And the Dirty Man Safe is a really interesting safe that will help you keep all your valuables safe in these uncertain times. It doesn't hurt to put things away safely. So the promo code is Monaco10. You get a 10% discount on the Dirty Man Safe. And all the details are below in the description of this video. So I have spoken a lot about the dollar index, that it is, in my opinion, a bit of a distraction because it measures fiat currencies against each other. And we all know that Voltaire once said that paper money or fiat currencies always return to their intrinsic value of zero. So there's always a lot of movement, relative movement in the FX market. It's a highly leveraged market. It's where they trade paper, gold, and silver as well. But in the short term, the strength and weakness of the dollar can affect gold. And Jim Sinclair knew about this, but I think his golden pillars are proving to be correct. I think the top that he talks about in the US dollar is more against gold, because gold is really the ultimate measure of value versus fiat currency. So it's really against the dollar that gold will shine. But the dollar also needs to be relatively weak, but not, how can I say, necessarily weak against the other fiat currencies. And we're going to come to that in a minute, why I think so. And I'll prove it to you with numbers and charts. I've recently spoken about the 5 golden pillars, and I actually found one of my old videos where I spoke about it, and I had a picture of the golden pillars that Jim Sinclair and JS Mindset actually drew up. So this is theirs, not mine. It's very hard to find it these days, but I found it and I did a screenshot from my video. So let's look at these 5 golden pillars, and I think they're all set for a big move. So you see here that he's got a number of $1,650. That's for the price of gold. I think we've clearly blown through that price, so that's positive. And then we have the recognized top in US dollar. And I would say versus the dollar index, that's like it's quite relative. And then the second pillar, looking from left to right, that's how it is on my screen. Trust in USA paper assets declining. I think that's very much in play, especially after 2022, when we saw stocks and bonds both decline, and we're seeing bonds decline this year as well. Yes, there has been a correction. I don't think the bond bear market and the relative weakness of the stock market versus real assets and the dollar is anywhere over. I think what we're seeing in bonds is a correction. The third pillar is the one that I think we're getting, and it started back in 2020. Bullish general commodities market, and I think that's only going to continue. Yes, there are ups and downs. So I think that pillar is is set as well. The fourth one is really a shoe-in. I mean, this has been going on for ages. Triple deficits of U.S. budget, current account, trade firmly in place. Wouldn't you say that the budget deficit is firmly in place? We're at a $2 trillion one in the last fiscal year. And now this one as well. I think the recognized top in U.S. Treasury long bonds. I think when he designed this, it wasn't recognized, but I think more and more people are going to recognize it, especially by the middle of next year, when I think bond yields will have rebounded from the current correction. Even Jamie Dimon, I think yesterday, he said people in the markets reacted too aggressively to the fact that CPI or CPI was 0.1% lower. I mean, the bond market, I've got here the data yesterday. We saw the 2-year note yield drop 20 basis points. We saw the 10-year drop 18 and the 30-year drop 11. I think that was an exaggeration. I think bond bears are going to use this short-term rally to sell even more bonds. And we know that the Treasury's got, well, about 8 to 10 trillion to roll over in the next 12 months. And that's huge supply. So I think all these 5 golden pillars are set in place. So today, before we look at the markets, I want to do something a little different. The people at Wealth Research Group, they've put up a really good research piece. All you have to do is click on the link below in the description, wealthresearchgroup.com/boom. And it's interesting that they're looking at the dollar as well. And they talk about the fundamentals, the fact that Moody's just downgraded the outlook for U.S. Credit to negative. And they talk about the fact that the reason they've done that, aside from all the deficit spending, all the national debt, is the polarization, the unwillingness of both political parties in the U.S. Congress to do anything about it. I mean, they can't even keep the government, they can barely keep the government open. They can barely increase the debt ceiling, right? And they're concerned as well. They say that investors are going to be very worried about this in the next 5 to 7 years. And why? Well, because the dollar is still one of the it is still the major reserve currency, but they see a gradual, actually they see a gradual devaluation of the dollar versus the major currencies, which makes sense with what I've seen with the dollar index. And if you look at what they're saying here, they see a 4 to 5% devaluation of the dollar over the next 5 to 7 years. That's going to wipe out about 30% of the purchasing power of the dollar. And they think mining stocks, despite the fact that mining stocks have been, gold and silver mining stocks, have been pretty much in a bear market for 12 years, they think it could go parabolic. Yeah, check out the link below. Of course, I said raging bull market, and I think the dollar index is what's gonna push that, even though I wanted to talk about the dollar index because we had a low in March of 2008, just above 70 in the dollar index. That's the all-time low, 70.69. And on that day, I remember it was the day that Bear Stearns was bailed out or taken over by JP Morgan. Gold topped at 1,030. Yes, 1,030. So the dollar index now is at 104. So we've gone up 48% in the dollar index. And as I speak here, gold is at 1970. So we've gone virtually up 100% in gold. So how can that be? The dollar index is gone up 48% and gold is gone up 100. Well, because, as I said, in the long term, all fiat currencies are sinking. And what this shows is that the minor currencies that are part of the dollar index, they have done even worse versus gold. So I know yesterday the currencies were very strong and gold didn't really do that well, but I wouldn't be concerned about that. But what I think is happening here is that the dollar index made a top in October. Actually, it was October 3rd, which is an interesting date. And why is that? Well, it's because it's my birthday, but it doesn't really mean anything. But I think the dollar index could be oversold in the short term, but it's definitely made a top there. I think from October, I think that was at, let's see the number, exactly where it was, 107.35. So I think it will be tough to get back up above that number. And then I think the next objective is 100 and then 90. And if we get to 90, I think gold will have blown right through that 2075, 2100 level. And that's despite the fact that we're not even back to 70. We might not even go back to 70. I think what the raging gold bull market and silver bull market will be telling us is that all fiat currencies are sinking and they're all gonna be debased. And I'm even seeing people talking about the fact that central banks need to cut now. So let's look at where the markets are this morning then. It's 8:09 London time. We've got spot gold at 1970. It's up $7. High's been 71, the low 61. Silver is continuing to do relatively well. It's up 18 cents or 0.75% at 23.25. High's been 32, low's been 23.02. Dow futures up 77. The S&P futures up 11, and the Nasdaq is up 47. To the currencies, we got sterling down 0.25% at 124.65. I saw UK CPI came in lower than expected. Do I think the inflationary problem is over? No, anything but. You can't really trust these inflation data, CPI. I made a video last year, of course, in May, saying that, not saying that, but noting that the ONS has changed the way they calculate CPI, and it's about 1% lower than it used to be prior to that. Anyway, the euro is unchanged, 108.75. Dollar is a bit stronger versus the yen at 150.66. And the dollar is down 0.1% at 7.24 versus the yuan. Let's check out the other currencies. Aussie dollar is unchanged, 65.09. The dollar is down slightly versus the loonie, 136.84. And the Kiwi dollar is up 0.5%, and it's above 60 at 60.32. Let's quickly look at the commodities. WTI crude is unchanged, 78.15. Brent is unchanged at 82.30. Platinum is unchanged, trading at 887, and high-grade copper is unchanged as well at 371.50. Let's quickly look at the bond market. The 10-year yield it's actually unchanged right now at 4.45. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.